Welcome back. Let's talk commodities now, and Manisha is now joining in. Manisha.
Well, thank you so much for that. I'm taking a look at the crude oil prices right now because yesterday we saw 2% of a decline coming in for prices, and with that it's trading at a 2-month lows right now. Well, that is the report card on what the crude oil prices have done in last months or years. So in 1 week itself, we've seen prices decline by 5%. It's down 7% in last 1 month. And in this year until now, the crude oil prices have declined by 4%. If you look at the year-on-year prices, we're down by 12% in case of crude oil prices. Also remember 2023 and 24 as well. Crude did post both of these years into negative, and 25 hasn't started on a better note as well. As you can see, we are down 4% already in this year. But there are contradicting fundamentals on crude. When you talk about the factors which are weighing onto the prices, the major clearly comes in from potential Russia-Ukraine peace deal. If that happens, that would mean that you will have Russian oil coming into the markets as well. That would increase supplies, and that could weigh onto the prices. The other point is about the tariffs on in case of crude when it comes to Mexico and China, even Canada for that matter. And that could really disrupt the markets, not see economic growth come in, and that's weighing onto the space as well. But I also want to take you through factors which seem to be supporting crude oil prices at this point in time. The major in this is the crude inventories itself. If you look at the last 7 weeks, we've seen the U.S. crude inventories continue to decline. The latest decline has been by 2.3 million barrels, and that is supporting crude prices. And then you have to look at the U.S. crude production itself, which is at record highs at around 13.1 million barrels. This is a major news that came in overnight, where U.S. is talking about revoking Chevron's license to operate in Venezuela. But at this point in time, Chevron really is 25% of Venezuelan exports. And if you look at that overall number, that stands at 240,000 barrels per day. If that goes out of the market, then you are looking at support coming in for prices. Apart from that, it also has to do with U.S. buying crude for its strategic petroleum reserve. Remember, U.S. has been saying that every time the crude prices come down, U.S. would want to buy for SPRs. And now that the crude prices are trading at $68 a barrel, you could be looking at that buying coming in from U.S. as well. But there are some factors which also are leading to a lot of uncertainty into the markets, with the U.S. especially reaffirming plans to impose tariffs on energy imports from Mexico and Canada. It has talked about 10% on Canada and 25% on Mexico, but we still have to see that final paper there. And then U.S. also is threatening tariffs on European Union goods. So that uncertainty continues to keep the markets very, very volatile and jittery as well. If you look at the Goldman Sachs report, which came in overnight, it says that the Brent prices will trade between 75 to 80, exactly where we are trading right now. So it's going to be a range-bound trend for the crude oil prices, but volatility perhaps would just about continue.
Thank you, Manisha, for that. We